don't think this is one of the videos where you would want to listen to, and I'll tell you the reason. I don't have good news for a vast majority of people, but at the same time, it is fantastic news. And I know that sounds really weird, but I'll explain it to you. We just got the my business intelligence team just did the full analysis over the last 4 years of the Shortlet market, and we curated all the content, all the data from not just us but other people as well. And it's easy to get that online, and when we compared it, there has been a dramatic decline in occupancy rate for Shortlet. And not only the dramatic decline, but also the daily rate. There has been a dramatic decline in the daily rate. Now, this is as a result of oversupply. So you have a lot more properties being rolled into the market on a monthly basis now. Then there's the shock side of things. People who have been sold a property for Shortlet, they've gone to go and spend 20, 30 million naira, and with the hope that they're going to be fully booked because they've been told that they will have 80% occupancy rate. And then they put their property out and they realize that they can't get occupancy rates, and they are the ones that are driving the property price down because they're thinking to themselves, just get me a booking, get me a booking. So what's happening is that they are driving the process. So you have a brand new property that looks amazing, and that property price has been dropped dramatically. So your property has been in the market for the last 2 years, 3 years, that have taken a beating in terms of the look and feel, is now competing with a brand new one, which is now cheaper than your own. So you now have a dramatic drop in daily rate, and it keeps dropping. Then you have also low occupancy rate. So what's actually happened is that you're having, and then you then have a concentration of locations that are averagely doing 30-40% occupancy rate. There's no more 80%, there's no more 90%. Doesn't mean it doesn't exist. No, it does. Some people have a good clientele base, but when you look at the wider market, it's like maybe 3%, 5% of that market, and the rest of everybody else is just suffering, and you can let me know if that is the case with you as well. If you are doing very, very well, then it's God for you. But the reality is what I'm explaining now. So, and what we are realizing is that we are coming out of the market, and that I think is a very bad thing. Hearing someone like me, who, as you all claim or say that I'm the godfather of Shortlet, I'm coming out of it. But I'm not coming out of it to abandon it. I'm evolving from it. And the reason being is because the rental income that comes from the Shortlet rental income compared to your ROI is just not worth it at all. It just doesn't make any sense as well. And then the other problem we're having is the return on investment, and that is a bit of a problem for us. So for example, a property that we may have bought in 2021, 2022 for maybe $110,000, we are now having that property. If we that property maybe we bought it then for 99 million. That property today is probably 280 million. But when we look at the exchange rate, there's not much difference. And we're asking ourselves, if we put that money in the UK or somewhere else, even if it's a 5% capital appreciation or a 10% capital appreciation, and that's really good, that's even good. And then also our rental income will be in pounds. But where we are, and that will be about 5-6%, but it's still in pounds. But where we are getting a low rental income, and that is reducing, and then also the value of the property reducing, that's not great. But then we do look at the future projections in terms of FX, and we know that there's a strong chance that a pound could be 1,004 by the end of the year, and we could bank on that. Or because it doesn't make sense to sell now. So if it's going to be 1,004 by then it makes sense. Most people will sell. What you're going to find is most people will get rid of the property because they've now seen a bit of gain. So they will get rid of it to get their pounds back. And that's going to be a major issue. But then people are going to realize that it's not that easy to sell properties in Nigeria. Because you're looking at the Nigeria, there's so much new developments going on, people shy away from existing older developments. Why? Because of our poor maintenance culture. So what will happen is that a property that was built 5 years ago will struggle to sell, while the property that's being built now will sell very, very fast. You know why? Because new builds are a lot more attractive than compared to the old builds, because you're still selling the concept design. Now for the existing property, you are selling what it looks like today, and because we have a poor maintenance culture, it becomes hard to sell those properties. Do you see where I'm coming from there? So when people now start to force sell, you realize that people take their properties out of the market. So some people are going to rent out straight away and charging shortlet rental income and for rental, and some people are just putting their property out into the market, to sell. And if you look at the prices that they're selling, they're looking to get their gain. So I can't buy something for X amount, dollar to naira depreciation has happened, and I'll sell it at a cheaper amount. And because I own the property, I beg, if you won't buy. If you don't want buy, you will stay at that price. While you then have some people that will be quite desperate. Now, it's almost like a chicken and egg thing, and the truth of the matter is that if we continue like that, we're going to hit a major bubble. Now, because of the way Nigeria's economy works, it's almost like we're perpetually in a bubble. So when people say, oh, the bubble is going to burst, it's not going to burst because we are already in the bubble. You get my point? And the bubble bursts every single day. So there's no such thing as, oh, it was going to burst. It's burst already. It's burst years ago. We're just living in that era, and it keeps getting worse and worse because it has burst. We are exposed, so. And you just have to navigate your way through and build in that respect. So, what does that now mean for us as a business? I've looked at the data. It's not making sense to me. So, for example, there's a strong chance that my Mayfair, my VI units, 10 units in Mayfair, I'm going to let it all go. They definitely have let go all of the ones in Osaka, London. It makes sense for me to either sell, or it makes sense for me to basically release capital on them. So for example, if I was going and take a loan on 10 properties, even if the interest rate is 36%, wherever I put that money, if I'm getting 70% or 80% return on investment, and it's, say, for example, generating foreign currency, then I have the capital appreciation gain, and I also have my return on investment. So my capital appreciation gain might even be the one that pays for the loan, while I then make my profit on it. Now, it's easier to do that because you're thinking to yourself, I'm not making money from the property anyway, but at least let me release the capital, use it to do something, pay it back, and still have the property. And some people will just not care. If you take the property, take it. At least I've released the money and then I'm going, because that's the easiest way to sell your property. So to release cash in your property, because that equity releasing doesn't happen unless you're taking a loan, So, and then a very high interest loan. So you have all of these things to factor in. And when you look at it from that perspective, you want to now decide, where are you focusing your efforts? So as I've given you this terrible, bad news, what is the good news? KG, what are you doing? My focus is recreational and vacation rental. Okay, so really recreational, and it's always been my focus from day one, because when I came into this country, I realized that I need to be recession proof. I need to be FX proof, currency naira to dollar devaluation proof. I need to be Niger factor proof. And the easiest way to have that is recreational real estate. Recreational real estate open to the international community and domestic community, so both international and domestic tourism, giving you the opportunity to charge high yield rental income in naira, and then also your your dollar rental income, and is also high yield as well. Target a particular target audience that's exposed to the international community, and that gives you your expats, your HNI, your diplomat, your foreign nationals, and your Nigerians in diaspora, so those are the areas that I focused on. So that helps me to be almost recession proof. Then look at the population density of that target audience, and based on that target audience, the size of that target audience, even if I was able to get 1% or 0.5% of that market a year, am I able to run and be profitable as a business? And that's why I'm consolidating all of my investments into vacation